Hey everybody, Brian Shannon here from alphatrends.net. Today is Friday, the 29th of November, 2013, and it was our last day of the month for trading in November. For the week, we had the S&P 500, the NASDAQ, Russell, and Semiconductors all positive here. The Dow was as well. That number's incorrectly colored. But we did add to the gains for the month, where we see a real nice month here for equities. And for year to date, obviously, we're padding those gains as well, with the Russell 2000 having a real nice month, up 4%, adding to the now what's a 34% gain year to date. Let's take a look at the charts here. The S&P 500 obviously remains in this powerful uptrend, innocent till proven guilty. We're up at all-time highs, and on the 10-minute time frame, you can see we had a little bit of a pullback here late in the day today that came down right to the 5-day moving average. We're looking at a 10-minute time frame. Each one of these candles represents 10 minutes worth of trading data, and this between these bars equals 1 day. So this 5-day moving average is based on the trailing 5 days using intraday data. It'll look different than if you're looking at a 5-day moving average on a daily chart. So keep that in mind. But the key level for next week is going to be about 180.25 to 180.50. If we can maintain to hold above this level, then the intermediate term remains innocent till proven guilty, and we continue to give the benefit of the doubt to the buyers. We're not trying to look for a top in this market. That's basically a waste of time. People have been trying to pick a top in this market ever since it bottomed out in 2009, and not one of them has been correct about it for more than about except for day trades basically. So we're going to continue to say it's innocent till proven guilty. We look at a 30-minute time frame here, again referencing that 5-day moving average, and you can see that that 180.25, 180.5 area has the potential to become the support. We have the trend line in there as well. So going into next week, we look at this market and say, yes, we're still clearly in a strong uptrend, and maybe it's getting overbought and due for a pullback, but there's no sign of the pullback yet. So until we break below 180.25, 180.5, consider this market innocent till proven guilty, and look for the individual stocks like we do each day on Alpha Trends that offer the best opportunity to the upside in relative to how much risk there is, that is how far it's run. You don't want to buy something like the Qs after they've had this 6-day rally. Instead, you want to look for something that hasn't rallied yet, where you can put your stop in. But the NASDAQ, if you're in it, you should definitely still continue to hold. It's behaving very well here. On the 10-minute time frame, you can see we've got a much stronger rally than the S&P 500, and that's here clear that we can see we're up 2% in the NASDAQ this week versus just a 0.11% gain in the S&P 500. So this market's getting a little bit more extended, but the pattern of higher highs and higher lows is still intact. I think that a pullback of some sort would be natural, would be something that would be healthy for this market. And next week, what we'll want to keep an eye on primarily would be really about, when we look at a 30-minute time frame, it's really at about $84. But we've got that rising 5-day moving average. Let's keep an eye on how it reacts to that 5-day moving average, if it pulls back to it, or if the 5-day moving average catches up to it and this market corrects a little bit more time-wise. The Russell 2000 was up 6 pennies today, and for the week in here, we see again that Russell 2000 had a good week, up 1.5% basically. We did see a pullback here late in the day, but no damage done basically. We had a gap higher and the market rallied up to daily R2, hit that twice, and then sold off. So for the week though, again, a very positive week. This what we'll be looking for next week would be the key level of 111.5. That's the bigger level that we want to be aware of. But we'll do the same thing as with the NASDAQ, which is to look at where we are in relation to the 5-day moving average. If we're still holding above that in the direction the 5-day moving average is advancing, then we're innocent till proven guilty, and we still want to give the benefit of the doubt to the buyers in terms of individual stocks. The semiconductors broke a little bit of resistance at about this 41.20 level today and pulled back to it. So if we can see 41 to 41.20 hold as support early next week, then I think you look at this daily time frame, it's been building some energy in here. We've got these higher lows. lows, we've got these lower highs, we've broken a little bit of resistance as we've seen, and we've got a very strong weekly chart. So it looks poised to continue. Breaking below 41 and holding below that for more than a half hour or so would probably put it more neutral, but it appears as though the semiconductors are poised to be able to continue to move higher, and particularly above about $41.45. Up above that level should spur some further buying, similar to what we've kind of seen recently in the financials. The financials, which had a good week after they broke out past that 21 level 2 weeks ago. We saw that the breakout of 21 did then hold a support, and we added to those gains this week. The 10-minute time frame here, we can see that we've got this level in here at about the 2145 to 2150 level. That's our first level that we'll want to see hold a support. But if this level fails next week, we've got this trend line here. Don't lose sight of that. But the next potential area of support that it may pull back down to is about 21.25. And if you're a very aggressive day trader, perhaps there's opportunities to day trade it down to that level. However, it's in a primary uptrend, it's really not worth it unless you're looking for very short-term trades. Apple this week did break out beyond that 528 level that we'd been talking about in here, and as I'd mentioned to subscribers on I guess it was Wednesday or Tuesday where it broke that, I said it doesn't look like this is the type of move that's going to pull back. I think that we're going to get a running breakout, that we're going to continue to rally through here, and that 550 to 575 would be our target by the end of the year. Here we are at 556. We're at new highs for the year on a closing basis, and on an intraday basis you can see as well we've got a rising 50, 100, 150, and 200-day moving average. So Apple, I still think, has the potential even to head up maybe close to $600 by the end of the year. The thing is, I wouldn't buy it here after it's just run from 515 to 555. It's just had a 40-point rally. Instead, I would wait for some kind of pullback consolidation. It's tough to say where that would occur, but if you're in it now, you want to obviously raise your stops up to the level that's appropriate for you. Let's talk about Bitcoin for a minute. This has been an incredible market here. This is a daily chart of Bitcoin. You can see just back in October, it was $109 a share was this low right here, or $109 per coin, and we'd seen a high so far, which was hit today, of $12.42 on this daily chart. The other one that doesn't get as much attention, but just a much more impressive to me move, because I was watching it here at $4 a share about 2 weeks ago Saturday, 14 days ago. This one went from $4 a share, Litecoin, to $48. So a 1,200% rally in the course of 13, 14 days. You can see it's beginning to pull back here on this daily chart. If we look at a 30-minute time frame, let's go to an hourly time frame, because we saw a little head and shoulders pattern which had formed in here. I can't really draw on this chart, but we see this broken support at 35 holding, acting as resistance, and looks like it's probably headed down towards the upper to mid 20s before this one could bounce again. But there definitely is some very interesting opportunities going on with these alternative currencies. And speaking of that, let's talk about gold. It remains in a downtrend below a declining 10, 20, and 50-day moving average. No surprise there that we should be able to continue to see further weakness, probably down towards about that 113 level. And Tesla was another one that really, it bounced a little bit this week, but very unimpressive as far as any energy goes. We did get above a little bit of resistance in the 5-day moving average, but we're below a declining 10, 20, and 50-day moving average, with the 200-day moving average below us at about 111. I think that that's a possibility for us to see it come down to that level, but we can talk more about that as we do all day in the chat room at Alpha Trends. If you're interested in that, any questions that you have intraday, the chat room is something that I'm there each and every day, and also end of day video reviews and new stock ideas each and every night before the next market day. So hope you have a good weekend, and I'll talk to you Monday. Thanks.